Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 27th of March, comes to you from London. And thank God it's Friday. It's been quite a week. We saw last night equity markets falling quite heavily in the US. After the market closed, Trump came out with comments that we're going to see a delay of another 10 days. And strangely, that relief rally was very short-lived. We have a new buying thrust on the 10-minute chart on Brent crude, and that's taken us higher and activated a new upside target to 117, back to the top of the range. So that's really quite interesting that we've broken to a new high, and really the market is starting to think, well, this war is being delayed. And I look at on LSEG, I look at the futures prices on my screen and just seeing how the futures contracts are trading. Interestingly, these prices a few months out now are starting to look more and more elevated. So that's just telling us that the market is actually starting to say this is a crisis that's going to go on for longer, less and less of an energy spike and more of a new paradigm. And we're seeing, if we look at the charts, we're seeing back to testing new highs. This 120 level on Brent crude is really critical. Looking at gas prices, the European main gas contract, which I look at constantly for clients, 50 is the new base level there. And so, and we're seeing in the UK, for example, gas prices up 3%. And even if we look at UK power, that's also remaining elevated. So we're seeing this now becoming more and more of a crisis. And I basically analyze the markets every morning for our energy clients. And today is a bullish day on all time frames. We'll put this report out to clients. And so really that is it, that we're seeing the energy moves. And then if we look at soft commodities, which I also look at for trading clients and commodities, this is really interesting how we're seeing these trends. So this is the long term, the medium term, and the short term trend based on the weekly, the daily, and the 60-minute chart. This screen just reads the chart data and puts it in, and these are all my targets and key resistance and support levels, all automated off the charts. And really interesting how we're seeing grains all turning from long-term neutral to short-term bullish to bullish. All of this is changing as we go. Corn bullish on all three time frames. If you look at urea, we talked about, that is the main element for fertilizer. This is really filtering through into crops, and we're seeing things like rough rice that was bearish long term. It's now bullish short term, and we're seeing a transition where all these soft commodities are starting to become more and more bullish. And you'll remember, if you've watched my resources on Update and the LSEG, you'll remember that the markets, typically bonds fall first, then equities. Meanwhile, commodities are rising, and last of all, it's precious metals. So, and really interestingly, we're seeing that. And if we look, first of all, I just take a quick look at the bond markets. Japan up 1/3%. This is a really scary situation. In January, markets were really fearful about Japan bond yields being higher. Well, they're actually now higher today than they were back then. So, the situation is worse. And if we look at the 60-minute charts, we've got a big upside target that is potentially going to take us much higher. Japan is the most indebted country in the world with 250% debt to GDP ratio. And the reality is that what will happen here is the Japanese will need to start liquidating dollar assets in order for liquidity. So this is a real crisis building, and we're seeing this yields filtering through. This is the US 10-year yield. You're seeing pullbacks. The market breathes a sigh of relief, but the trend is up. And that's the whole point about a trend. You get 2 steps forward with the trend, 1 step back. In fact, the real measure is 5-3. Any of you who've done my point and figure course will know that you need 5 steps forward, 3 steps back as a minimum. And anything greater than that is an uptrend. And we're seeing here that we're making new highs again this morning. and bonds coming into focus. The UK bond yield is actually just a bit weaker this morning, but the reality is, again, we are pushing higher there as well. And if we look at the German market, we're seeing here also bond yields with upside targets. So it's really quite critical that we're seeing these targets all heading towards higher inflation. And so if we look then at currencies, of course, the big question is for the Japanese yen. And if we look at this chart, that is pushing to new highs as well at 160. So really quite interesting that the inflationary effect for Japan with commodities, especially gas, which comes mostly from the Middle East, the inflationary effects for Japan are going to be really quite significant. So markets are in a mess, basically. And if we look at things like Bitcoin, that has just given a new downside target on the daily, on the 60-minute chart, downside targets. So, this whole risk on trade is disappearing. Now, as I mentioned, the US market had its worst day. We can see we've moved to a new 6-month low. It had its worst day this month so far. We've got the downside target. And again, if we look at the 60-minute chart, downside targets, downside targets, downside targets. Every time we have a recovery, that sets us up for a new selling thrust. And you can do these targets on your Bloomberg, on TradingView, wherever you want. The key thing is you cannot ignore the selling thrusts that are generating the downside targets. So it's not a good news for markets. So Trump's comments came out after the market shut last night, but this is embedded. This is where we're at. Looking and people say, "Oh, you're so bearish." It's nothing to do with me having a view. It's just what the charts are saying. And here we can see on the S&P, very similar picture. The FTSE has looked quite different. The UK market has looked quite different, but of course, in the end, you can't buck what's happening globally, and so that's going to be really quite key. The DAX, that has been in Europe, has been breaking to new lows. Forget the upside targets. They were given a long time ago. The picture has changed. And if you go to the 60-minute chart, of course, the downside targets are ruling. You have a relief rally, an upside target, but the reality is you're below the cloud. You're in a downtrend. You pay more attention to the downside targets. Watch my resources on how to read the targets. They're all free on the Updater website. So it's not a great day for equities, and certainly there's been a lot of press about what's going on in gold, and interestingly we've seen a really big sharp sell-off in gold, and this has really been driven by the need to get liquidity. So gold is an asset that various funds and people have had to sell in order to get liquidity, and so it's been a bit of a sell everything in order to just raise cash. But interestingly, that sell in gold now starting to look overdone on the 60-minute chart. We've got a new upside target back above 5,000. We're starting to crawl through the cloud. 4,600 is a really critical level, and watch for a break above that if you're trading gold. Of course, look at the 1-minute charts, and if we look at silver, we can see that again, we've got moving slowly through the cloud, not as clear as gold in terms of the recovery, but that's really quite key. Now, last of all, and look at the tech majors. It's going to be a pretty bloody picture, to be honest. And this is the daily chart for Apple. Not yet activated the downside target here, so that's quite interesting, but a new low will do. Nvidia, I'll go straight to Nvidia. 170 is the level that I've been quoting for quite some time on Nvidia. 3 targets. What does 3 targets mean? It means 3 times more likely to go to the targets. 3 selling thrusts gives more likelihood that the targets will be met. This 170 level is going to be super critical. That will give a 6-month low. But again, these targets are baked in. And if you're trading these things, look at the 60-minute charts. So that's it for today. Watch these markets, watch these targets, keep an eye on your trends. Have a good weekend, and see you next week. Bye for now.